Just wrapping up a trading day, guys. Banked over 15K on gold today with a beautiful short to the downside. So I'm going to be breaking down this trade in full detail, the reasons as to why I took the trade, more importantly, with some key takeaways you can follow that you can implement in your trading by the end of watching this video. So without further ado, let's dive straight in. The gold market has been selling off quite aggressively the past few sessions to the downside. Now, I want to unpack the reasons why. Gold is a very geopolitical asset, very dominant geopolitical asset, and you want to really remind yourself as to why gold trades. Gold trades higher on any uncertainty, any fear, any doubt, right? Gold will trade higher. It is the alternative. So think of it, if you were really unsure with what is going on right now, what's the first thing you would do? You would want to buy gold. Then you want to dial that back and think to yourself, if everything is going perfectly, right? And there is no fear, there is optimism, there is greed in the markets, because there is now some certainty. What would happen to a safe haven asset that is no longer needed, that is no longer getting bought? It is naturally going to trade lower. Keep that in mind. And I want to show you some headlines. We've seen the US and the Eurozone agree to a trade deal. We know that Donald Trump has come to Europe, has come to Scotland to arrange a deal with the UK. And he's also announced a delay on tariffs. This is a very big one, with China especially. If there is a delay in tariffs, that means everything's great. There is no problem. Why would you even worry about anything? Buy stocks, right? There is that sort of optimism coming back into the market, but more importantly, trust and hope is put back into the dollar. Try and keep that one in mind. So again, I want to remind you that this is a very, very good scenario to be long dollar and short gold, and that is exactly what we did today. If you go ahead and look at gold ever so briefly on the weekly time frame there, last week, and this was my first indication as to why on Monday morning I have to be short gold. We had this very bearish shooting start straight out of all-time highs, right? Gold has never been at these prices ever. It's never been there. So this is a very clean indication that we can take advantage of this to the downside. I then immediately came to the market, and again, my charts are very bare right now. I don't need to draw 100 things on the chart at all. I am jumping on the back of sentiment. I saw a tweet on the weekend. I even said in my free community, I'll leave the link down below if you want to go ahead and join that, or I'll pin it over here in the video. I said this morning, I read a tweet of the weekend, and that already gave me an indication of what I should do on market open. That was the tariff delays. The fact that there was going to be tariff delays, this already told me everything I need to know. Absolutely everything I needed to know. So again, this morning for myself, I saw we had a bit of a push back into price. I was expecting any sort of reversal from this 33.40 level. And whenever I mark a level on and I want to be, for example, trading to the downside, I want the market to trade below that level, retest that level, and that will provide me my entry. If I'm looking to buy something and I have the same level on, I need the market to trade above that level. I need the market to retest that level before I even enter. So try and keep that as a bit of a rule of thumb for yourself. So we obviously, looking at this on the 15-minute time frame, we had the break to the downside. And again, this for me is the move. Once you have that break over there, right, you can very clearly identify two previous points that were taken out. You can obviously trade from the level. You don't really need fibs anymore. I don't think anyone really needs fibs anymore, but it's there. It's there to use it. It is a great tool if you still struggle with identifying key areas to trade and enter from. But this is a great level, to be fair. I managed to lock some partials along the way, and then obviously erode the rest of this wave to the downside. Once we had that squeeze, I obviously had to lock in gains. The overall summary of this video was a quick little breakdown as to use the information that we're seeing in global markets, right? Gold is very sensitive to geopolitical issues. So let me explain this once again. If there is a scenario where, for example, Trump and China start reigniting tariff talks, they start, throwing threats out there on a trade war, gold's naturally going to have that demand for it to trade higher. But if there is everything working out and everything is perfect, there is naturally going to be that unwind in gold because it's no longer needed. So I want you to try and keep that in mind if you are a gold trader. It is very, very sensitive to markets. But yeah, that was today's trade. Beautiful trade. Banked to the 15K on that position. So I'm going to be very cautious going into the market for the rest of the week. There is no real need to force trades every single day if you have such high performing, big momentum winners. So try and keep that in mind. But one last little brief look at the dollar. Dollar absolutely exploded higher on the session. So as I mentioned at the start of the video, if you've obviously had a large, if there is unwind on all these moves, that naturally puts dollar on the front foot, and that gives you the opportunity for gold to trade higher. Even with the likes of euro dollar, massive move to the downside today. Again, strong dollar, weak euro. Remember, euro traded higher on a weak dollar when the whole trade war started. Now that the EU and the US have signed a trade deal, that brings that optimism back into the dollar, because that optimism was once wiped out of the market. So you want to try and use that to your advantage. But again, guys, this is very sentiment dependent. So it is worth, especially now that Trump's back in power, keep a look on the headlines, keep an eye out on the headlines, because they will impact markets. Hope you've enjoyed this video. Do check the links that I'm going to pin down in the description below. I'll see you on the next video. Good luck.